Welcome back to the channel. My name is Brad and today is sweet tea time, Sunday. There's going to be playoff games today, so we're not going to waste a whole lot of time because Brad's going to watch a little bit of football today. So for those new to the channel, this is Sunday. It is sweet tea. Well, you might be watching this on Monday, but I'm going to talk about the markets, retirement, a little bit of sweet tea. Have my sweet tea here with me, and just whatever comes to my mind for the next, I don't know, 20, 30 minutes. Let's first talk about retirement. 7 months in. 7 months. Amazing. I'm still only 57, so I am much younger than most retirees, but I'm 57, fully retired. Just make YouTube videos about my retirement. I worked a corporate life all my life, pretty much. I literally was a factory worker when I first started out, but moved my way up through. But anyway, that's just me. Somebody asked the other day, how did you acquire so much wealth? And I'm like, I had a 401k in 1986. And I'm looking going, I looked at the profile picture and I went, you weren't even born in 1986. Just pointing out the facts there. I mean, come on, when you are 30 years old and you're already thinking about retirement, I was working before you were born. This, there you go. Some of the little facts of life. Because I know everybody's looking at getting out early. And here is some of my thoughts on just getting out early. If you're just getting out early because you want to get out early, bad answer. Just a bad answer. You have to have something to go do or something that you want to go pursue. When I literally, I told people that, hey, maybe when I get close to retirement, I'll start a YouTube channel and talk about retirement. And that is something I wanted to pursue. And I had that conversations months before I even started into YouTube. I mean, we're talking 6 months beforehand, before I even retired. So you got to sit back and go, what are your plans for retirement? Are you just going to do nothing? Because that is going to lead to your death. You got to go do something. My grandfather farmed until he was 92. He farmed every single day. There was a reason for him to wake up. There's a reason for me to wake up. I got to look at the markets, figure out what subject I'm going to talk about tomorrow. And it's a lot of fun. There's a lot of enjoyment. I get to do a lot of different things. I get to talk to a lot of different people with fund managers. And it's a lot of fun. It really is. I really enjoy that retirement and being able to talk to people and share my experience. Now, healthcare, I got full-time RVer healthcare insurance. One day I might do a video on that and give some posts. Maybe next year I'll go on to the Affordable Care Act, but in 2024 I made too much money to go onto the Affordable Care Act. Even though I only worked 7 months at the beginning of the year, that in that 7 months, I made way too much money. The amount of money I would have to pay for Affordable Care Act every month would be astronomical. But next year, in 2026, my income will go down, or at least my apparent income will go down, and I might be able to afford to go into the Affordable Care Act, which would be about a $500 a month savings for me. So I'm looking at it, not making any moves, but that's my health insurance. And I have health insurance because if something major happens, I don't want it to ruin my retirement. I want to make sure that I'm covered, because that is one of the major problems that you get is you get older, you get sick, and if you're not covered, you got a JOB for the rest of your life. Just don't want that in my life. I'm trying to set myself up so I don't have to worry. I am still planning on going to the beach in the end of March, but Logistics are slowly working its way out. Slowly. But that's how things go in life. You have hurdles to get over all the time, every day in your life. And gentlemen, one last word of warning is being married now 29 years, dated for 30 plus years. I forgot. I totally forgot this morning. She's right. Oh my gosh. Just roll my eyes. Yes, dear. I forgot to say the magic words. Yes, dear. I got up this morning. I was still asleep. And I forgot to say yes, dear. And I got myself in trouble. So there you go. Nugget number one. Yes, dear. Nugget number two. Getting divorced can ruin retirement. Oh, bad retirement move. So work things out. Everybody has struggles. Everybody does. I mean, my parents were married for forever. We've been married now I've been married to my wife longer than a lot of the viewers are even as old. Just throw it out. We're coming up on what? We got married in 95. So there you go. This year will be 30 years for us. Let's talk about who showed up to Trump's inauguration. Well, look at that. So if you're not invested in things that those people are invested in or technology that those people are invested in, you might want to think again, because they have the ear of the president and they're going to try to drive the president to do certain things. So just keep that in mind. Who showed up to who's involved in the what. And it's just, the rich scratching the rich back. You know how that goes. Come on. All my jobs, and here's a little tidbit of life. All my jobs are because of who I knew. There you go. It is because of who I knew the whole entire time. My first job is because I knew the weld shop manager. My next big move in the corporate world is because I was doing a job that I got to talk to other people and I networked. All my jobs were basically due to networking. Who I knew. Moved up all the way through the corporate chain. All the way up. Just because of who I knew, and moved up forward because I demonstrated that I was trustworthy and reliable and actually somewhat knowledgeable in a lot of different subject matters. I mean, literally, I went to a meeting one time with a bunch of people that did not know who I was. And by the end of the meeting, I had other product managers asking me questions because they said, somehow everybody believes you. And that's because I knew the instructor because of my networking. And it became very clear that analytically, I was able to look at things differently than everybody else's eyes, because I actually worked outside of the core group. I was an outsider. But since I was an insider with the instructor, because we knew each other, everybody quickly realized how come he gets a lot more respect from the instructor than everybody else in the class. But that's a totally different story for a totally different day. Let's talk about semiconductors. And this is going to be a subject later this week. If you're watching every video, you're going to see this slide later this week. Semi-production, US is going to go down to 11, but up to 13 and 14 in the future. That is something that's impressive. I'm just looking at this from my perspective, where the semiconductors are made. The last one is semiconductors surged 9.8% gains in January of 2025. So far this month, they had a 9% gain. And that's, again, interesting. When I look at that chart and see how that chart compares to everything else, I get excited because I can compare that to the S&P and see how maybe that sector has done better than other sectors. And that's a video for later this week. Stay tuned. Performance of the S&P missing the best days. And goes into a whole lot of different categories. I'm just going to throw that out. If you've missed the best 10 days, you're at 6%. If you missed the top 20 days, you're at 3.3. And if you're fully vested, you're at 10.2. Okay. So I'm going to throw this out for conversation. Those best days also happened during the downturn. So most of them happened during the downturn. If you're playing the 200-day moving average, you missed the downturn, but you also missed the best 10 days. But at the end of the day, you did better. And they forget to tell you that. Just throw it out. For those that are sitting on the sideline, and there are still people sitting on the sideline, you should DCA back into the market. Everybody's still waiting for this 20% drop. I get that conversation every single day. I'm waiting for a 20% correction. And I'm sitting there going, and 2027 is just around the corner. It's coming. It's not happening in 2025. At least not until maybe the end of the year. But I'm sitting there going, so you're just going to sit on the sidelines for the whole entire year and twiddle your thumbs. Hopefully you're in something that's making some dollars. Just going to throw that out for conversation. That's just Brad. It's just Brad having a little fun. A little sarcasm. Sorry for the sarcasm. Sure, I'm going to get a comment down below. So, risk-adjusted returns. I look at high-yield credit. Oh, look at that. The Sharpe ratio is 3.0. That's interesting. I don't talk about the Sharpe ratio, but Bitcoin is 2.5. Somebody missed out on that. Hey, total returns, 135%. Did you guys miss out on those? Probably. That's just how it is. But if you look at high-yield credit, their returns are only 8%. So you sit back and go, higher Sharpe ratio, but lower returns. I mean, the S&P is at 26, the Russell's at 31. So it's all about where you are and your thoughts. It's a great chart to be looking at. Now, I am going to leave a link to some charts down below of a report for you to go read. Nobody reads them, but I get like 3 or 4 clicks on them, but people go read them. These are not affiliate links. None of it. So, well, Seeking Alpha down below is affiliate, but the rest of it, when I leave a link, they're not affiliate links. Kind of threw this out last week, but here's a graphical. Biggest ETFs, inflows, all right, fund flows, Vanguard, S&P 500, VU, IBV for iShares, which is BlackRock. Oh, third place, Bitcoin. Don't miss out on that one. The next chart is Bitcoin took over that $2 trillion again. Nice. I just shake my head, and people aren't invested in Bitcoin, and they'll just continue not to be invested in Bitcoin because they don't know about it, but they're missing wealth generation. And I'm playing BTCI. Now, I am going to do a growth video again coming up, and I need to go out of IBV and QQQM and Berkshire Hathaway. I'm going to spread that out to about 6 funds, and IBIT will be one of them, just for overall conversations. Hey, so whoever wields power of AI is going to rule the world, in my personal opinion. And you can see what nations and whatever is going to rule the forecast of AI. And geographically, I want to be investing in those areas. The next one is AI systems have doubled every 6 months since 2010. Another interesting conversation. You need to really start thinking about AI. I am going to play a little more into the AI sector myself for income. Now, my growth section, well, probably a little more into the AI world, but I don't need that to grow too much. But you should be trying to generate some income off of AI, or the AI craze. And the object is to get in early. I think we're still early. Reinvest a little back into it, but you don't go FOMOing in, fear of missing out. No FOMO. FOMO is bad. And that's how people get burnt. Well, let's talk about direction alignment with global M2 and the liquidity cycles. And I threw this out, and people still said, they said, say what? And I'm like, if you're not watching the directional alignment of Bitcoin and the, let's go ahead and say S&P 500, it's 81% correlation to the direction of the global liquidity. You just can't make that up. Global liquidity goes up, 81% correlation, the S&P goes up. If global liquidity goes down, 81% correlation, the market goes down. Again, are you watching global liquidity? I have a TradingView affiliate link. If you're not using TradingView, and you should go out to TradingView, at least get the free version. At least get the free version. You can put some charts on there. You can show where things are. You can track the global M2. You can go out to the Fed CME website and you can track the global M2. You can track the US M2. And I track the US M2 more than the global, but you should track the global side. You should be doing this. This is not rocket science. And maybe I'll build out some links and put them in the description, but you can Google it just as good as anybody else. I mean, you can use ChatGPT and come up with the exact same link, so I don't get it. I mean, if you haven't used ChatGPT, the thumbnail came from ChatGPT. Literally told it, do a landscape at the beach with Bitcoin and the stock market and make it that landscape design, and bam, I didn't even have to do it twice. So that's what I do with my thumbnails, is they're all generated by ChatGPT. Well, not all of them, but when I have the backgrounds, those are ChatGPT backgrounds. Great tool. Just decided to go that direction because it's just a little more fun to put a little bit of graphics on the thumbnails, and maybe people click on them. I don't know. So you look at Bitcoin price in the versus the global M2 as a percentage, and you can, I mean, there you go. I mean, you can literally see when the global M2 goes down, the Bitcoin price goes down. And when the global M2 goes up, the Bitcoin price goes up. I track it. Please track it. Maybe I just need to do a whole global M2. Like, I might start adding that into my videos. Where is the global M2? Right? I add a lot of other stuff, man. And you can see that how it plays out. When you see global M2 goes up, you see the Bitcoin price go up. When you see global M2 goes down, you see Bitcoin goes down. And you can go back and look at the stock market. Every time the global M2 has gone down, the stock market does a little funky thing. You see global M2 go down in 2021, 22. Guess what? That was a 20% correction for the stock market. Nothing new there, ladies and gentlemen. Nothing new. It's out there. Just got to go know where to look and what you're looking at. Fear and greed. Told everybody to be greedy when Everybody else was fearful. Now we're back up to 49. Missed it. And on the greed side for cryptocurrency, we're at 73. There you go. Wait till that fear and greed goes down to like 10 for cryptocurrency. That's when you should be buying into all the cryptocurrencies. Not when everybody is greedy. Just throwing it out for conversation. Always be on the other side of the fence. Greedy when people are fearful, and fearful when people are greedy. And there you go. S&P 500 forecast for 2025. Technology, healthcare, industrial materials. You can see exactly how they're forecasting. Yes, you can. You can see which ones are forecasting up, which ones are forecasting down. You can see today, the top line, and let's walk through this. The top line is today. The bottom line is December 31st. And you can see the adjustment up and down, or who is going to be making more money in earnings over the years. Utilities is up a little bit. Financials are up a little bit. Real estate is down just a little bit. Energy is just a tick up. And I am going to leave a link to that resource down below because not everybody has fact sheet. But you should probably look at it. Growth versus value. Growth is back in the lead again. We had several weeks that value was leading away, but all of a sudden, growth is leading away. Value seems to lead the way when everybody is fearful, and when everybody is greedy, or it's moving of the direction of greed, it becomes growth again. Seems to be logical how that all works. Now, let's talk about Bitcoin, S&P 500, and the meme coins. Okay, so Brad is not investing in any of these meme coins. Bad thought. No, it's Bitcoin or nothing. I used to play around with Ethereum, but at the end of the day, I am in retirement. I don't have time to sit here and go back and forth and gamble my life away. That's not the way that I want to do it. I'm going to invest in Bitcoin and Bitcoin only through the ETFs. I do run a mining operation. Somebody asked a question about that again. So I get about 400 Satoshis a day in my mining. That's how much I make. It's pennies. Oh, it's pennies. But one day, it's not today, it's not tomorrow. It might be 2050, but one day a Satoshi is probably going to be worth $1. And if it's worth $1, then I'm making $400 a day. Just rationally, just thinking about that. If it's going to be worth $1 one day, and it's not anywhere close to that today, but if one day it does, and that's a bet. Yeah, I put a couple $100 in. It cost me the power of running 3 light bulbs. 3 light bulbs. You know, at the end of the day, that could be a huge win, or it could be a huge, you know what. But it's not a whole lot of money. And the best part is I get paid every single day. So if you like weekly payers, oh, you love this one. They pay me every single day. Every morning I wake up and I got a notification on my cell phone of how many Satoshis I got paid. Better than any ETF out there so far. That's how it is. Daily payers. But you notice that the Dixie went down in the Bitcoin futures and Bitcoin went up, or S&P futures. So when the Dixie goes down, we notice that Bitcoin and the futures go up. Easy trending. You can do that all on TradingView. Just throw it out. And this week, we're going to have the Fed meeting. Oh my. Is he going to come out hawkish or dovish? Dovish, markets go up. Hawkish, markets go down. We know they're not going to do anything with the Fed rates. They're going to do nothing. It's 97%. Usually when it's over 80, that's probably a pretty good bet. So I would not be betting on any reduction in the Fed rates this month. The question is, will he be dovish or will he be hawkish? He's going to come out probably in between. He's still going to be a little hawkish. He's still going to be, we don't know what's going on. And he doesn't know what's going on. I mean, they're talking about 10% tariffs now. Who knows what they're going to do and how that's going to affect him. But he's holding back. And that's the beauty of it. He's holding back. So if he needs to, he has a lot more to give out. He can drop the rates. He can do quantitative easing. He's not doing any quantitative easing and he's not dropping the rates, but he has both of them at his disposal just in case something goes bad. And I'm going to say, end of the year, probably next year, we might see some changes and he might have to loosen up. But you don't know. Don't know. So the last one I'm going to leave you with today, and this is just my thoughts, is I worked for 40 years. I had a job when I was very young. So I wasn't even out of high school. I had a corporate job for over 30 years. Wealth accumulation after 25 years, inflation adjusted. If you save $250 a month, you don't become a millionaire. If you are saving $1,000 a month, you become a millionaire. The math is fairly simple. And if you don't get there at the 25-year mark, you'll get there at the 30-year mark. Remember, these 401ks are offering you matching. So it's not all has to be your money. Make sure that you are definitely invested in getting the matching. And there you have it. It worked 25 years. But everybody wants to get out at 15 and not have anything else to do. That is the big question to me. Every time I talk to somebody, my conversation is you're going to retire early? What are you going to do? And if they have nothing to do, then I want to say continue to work. If you have other things that you want to go try to do, go do them. Take a risk. I took a risk, 57. I'm going to jump out and I'm going to start a YouTube channel, talk about this stuff. But my other risk was I was going to go work at Home Depot. But no, I'm going to just make YouTube videos and enjoy life, spend some time with my wife, and watch a football game on Sunday afternoon, and go Chiefs. Until next time, God bless.